All right, and welcome to today's very special Lunch and Learn webinar. We are going to be talking with our good friend Tom Cloud today and myself, Jerry Robinson. We're going to be talking about Diamond Investing 101. It's wonderful to have you here today. I'll introduce myself briefly. I'll also introduce Tom. For those of you who are familiar with followthemoney.com, most of you, of course, are. I am an economist, a trader, an investor, an author, and a coach. I help people all around the world understanding about investing and trading, and we do much of that through our website, followthemoney.com. We have a premium service there that many members use, our trend trading software, and of course we have our podcast that we do on a regular basis, our Follow the Money Radio. We've been doing that for more than a decade. And today we're joined by Tom Cloud, who is a hard asset specialist. And Tom, as many of you probably know, you've probably seen him on our YouTube channel where he does his regular precious metals market update. And that is something that many of you enjoy. And it's been a wonderful joy to have him along for the ride as we have done these podcasts for, gosh, as we mentioned, well over a decade. And we want to remind you that you're investing at your own risk. Myself and Tom Cloud, we are not financial advisors. You should always consult a trusted investment professional before you make any investment decisions. And Tom Cloud is a sponsor here at followthemoney.com, which means that when you buy hard assets from him, you are supporting the good work that we do here at followthemoney.com. So I just recently did a podcast entitled Hard Asset Investing 101. And in this podcast, we spent quite a bit of time breaking down what hard assets are and why they deserve a role in your portfolio. Hard assets, of course, come in many different forms. We can think of precious metals, certainly a hard asset, gold and silver, palladium and platinum. And what makes a hard asset hard is the fact that it's tangible. It's something that you can touch. It's perceptible to the touch, and they can be held in the hand. Likewise, you can also think of something like agriculture, commodities, and even energy. This kind of composes the PACE philosophy that we teach here: precious metals, agriculture, commodities, and energy. These are products that are derived from the earth itself, natural resources. These include things like corn and wheat and oil, natural gas. Commodities, of course, are tangible. They can be touched. They can be felt. They can be perceived by touch. And then, of course, we also have things like real estate. Real estate is one of my favorite types of hard assets, whether it's a residential property or an industrial property, a multifamily residential dwelling, even farmland or raw land. Virtually all types of real estate are considered to be a hard asset. After all, real estate is tangible. It can be seen. It can be touched with one's hand. It's real. It's something that has intrinsic value. And then we also think of hard assets such as things as collectibles. And this might be a very broad word. It may not encompass really all of the things that would also be the other category here. But these are unique types of assets. We think of things like art. Art is a very interesting type of hard asset. You can buy a piece of art and then see it go up in value over time. That's really neat for many people. And what's so neat about artwork, is the fact that you can buy that art, whether it be a sculpture or a painting, and then you can enjoy that piece of art. You can hang it on your wall, and you can enjoy, or you can put it on your shelf or whatever, and you can enjoy that piece of art, that hard asset. But at the same time, as you enjoy it, it's also going up in value. That's really quite something, right? You can't really say that for a stock. If you buy a stock from a company, you can't really sit it on your shelf and really enjoy it. Whereas with art, you can do that. So art is a very interesting type of collectible. That's a hard asset that goes up in value over time, that provides protection from inflation. And if you choose right, if you're a good art investor, well, you can do really well. We also think of things like stamps and rare coins, even things like fine wine. These are all kinds of types of hard assets that you can buy. And if you're good at it, if you understand what you're doing, then you can actually see those things rise in value over time. One of my favorite types of hard assets, I wish I knew more about cars. If I did, I would get into it, but are classic cars. I have a couple of friends who focus upon classic cars, and in addition to other things that they own in their portfolio, they invest in things like classic cars. And what's neat about that is that you really do get to enjoy a classic car. You can find a car that's really a vintage car, you can fix it up, and then, of course, you can drive it around and really enjoy it. But at the same time, you have an appreciating asset. How about that? That's a really neat. And then we would also throw into this category really what the topic of today's special Lunch and Learn webinar is all about. And that is something like gemstones or diamonds, right? And these are very interesting as well because, again, you can certainly enjoy these types of assets because, of course, you can wear them. What's nice about diamonds or gemstones in general is that, yes, you can put them in a vault, but you can also have them set in a ring or into earrings or into a necklace, and you can actually wear them and enjoy them. But at the same time, over time, they also tend to go up in value if they are a certain cut, if they're certain types of gemstones, certain types of quality. So these are some examples of hard assets, and I wanted to show you this quick slide before we really bring on Tom Cloud and have him discuss a very interesting thing about diamonds today, and that is the fact that when we look at the stock market, we really do need to have, we really have a compelling reason here to have more hard assets in our portfolio. Currently, right now, I often tell our students that about 20% of my investment dollars on a monthly basis that I have to invest, and even on an annual basis, go into the stock market. 20%. That means that I have another 40% going into real estate. I have another 15% going specifically into hard assets. So when you kind of add all that up, I have about 55% of my total investment dollars that I could put into any investment. They're going into things that would be qualified as hard assets. So about 55%. Now, not just one hard asset, not just gold, not just silver, not just real estate, but a mixture. So 40% goes into real estate, and the other 15% goes into a mixture of other types of hard assets. And this is really important because today we live in a paper economy where money is losing its value. Currency is losing its value through this currency debauchery that we have going on at the Federal Reserve. And when you look at the components of the S&P 500, for example, the index, very popular here in the United States, of course, the major U.S. stock market index, you'll notice that back in 1975, about 83% of the value of the S&P 500 was composed of tangible assets, that is, hard assets, machinery, real estate, buildings, right? Real things that you could touch, that you could feel, that you could see with your eyes. However, only 17% of the S&P 500 back in 1975, the value of it was composed of intangible assets, which would be things like goodwill and intellectual property and other things that you really can't see that have value, but they're intangible. They're not hard. We would say they're soft. But notice how over time, this has really dramatically changed to where in 2020, a full 90% of the value of the S&P 500 is actually composed, 90% of it is composed of intangible assets. That means that things like, again, corporate goodwill, intellectual property, and many of these other patents and other types of soft assets, if you will, compose the value of the stock market. And only 10% is actually composed of real things, right? So if you own a stock, you may think, well, I own a share in real things. Well, you do, but increasingly a diminishing amount of real things, right? So in other words, if you're in the stock market fully and you don't have a lot of hard assets, well, you may not really own what you think you own, right? So paper assets obviously deserve a place in your portfolio. Any financial advisor would tell you this, but at the same time, we might want to re-examine how much of our assets are in paper assets and how many of them are in hard assets, and maybe reevaluate the wisdom of that. So today we're going to be talking about the most portable form of wealth that we can really think of. Millions of dollars of diamonds, as Tom has said, can easily fit into the palm of your hand, right? You talk about portable, you talk about compact. it really is difficult to beat diamonds or other types of gemstones when it comes to that kind of compact, portable wealth that you can move around. So, Tom, I want to go ahead and bring you on because we've kind of laid the foundation here for what hard assets are and how diamonds and gemstones fit into that. And today we're going to be talking with you about how diamonds can be a possible hard asset that people can add to their portfolio. So I want to welcome you to the call today, and let's talk about diamonds. What makes them such a great asset?
Well, there's a lot of things, Jerry, that make them a great asset. You named portability, confidentiality, a great amount of wealth in a condensed area, something that's recognized worldwide, and this has always been there. But here's what's different today is you now have a system. If you bought a nice diamond in the past from a local jewelry store or a major jewelry store, when you walked out of there a month later, if something happens, you need to sell it, you're going to lose 40 to 60% of what you paid for it. And even though I've been in diamonds a year longer than I have gold and silver, I started this diamond company in 1975, and I started National Numismatics in 1976 with the gold and silver, and continuously the diamond company is still going, but I never sold diamonds for investment because the pricing was too opaque. It was too far bid-ask spreads were way out there. But everything changed for me, Jerry, about 4 or 5 months ago. I got a call from the top cutter in the world, the most recognized, largest cutter in the world. And he said, I couldn't help but think about you. I've been doing business with you for over 40 years, and I thought it was something you needed to hear about. And me, he said, a lot of the guys that are the biggest name in the diamond industry have come up through NFTs, these non-fungible tokens, in a way you can own the diamond and have it. So if you think of someone that invests in Bitcoin on the blockchain, they haven't invested in it because they don't understand what backs it up and how they can get it, where we in a non-NFT can have a diamond assigned to them. They can, the client can buy it and redeem the token right away and take delivery and enjoy it for years, like you said, and then re-tokenize it down the road. Well, all of a sudden, these people come out, and you start thinking about a diamond being mined in South Africa, Australia, Russia, where the major diamond mines are left, and those come into a cutter who has a agreement called a site, S-I-T-E, and they have a site every 2 months. So these big cutters get a new box of diamonds every 2 months to be a member of the syndicate, and then they cut the diamond. In the old school, they would take that diamond and then sell it to a master wholesaler who would sell it to the next ring down of wholesalers, and then it would go down to a salesman there. So there are about 5 people that made money on it. This thing that we're doing with Icecap is there's a 5% profit on it, and then we're getting it directly from the cutters, cutting out all wholesalers. So you're actually, it's incredible to believe that someone listening can buy a diamond as cheap as someone who spent their whole career in it, and they can buy it cheaper. Now, certainly, all diamonds are going to have changes in premiums, just like you have in gold and silver. When the market's real tight, premiums go up. Wholesalers don't want to get rid of it. Well, fortunately for us, there's about 6 companies that can do XXX, and this is what we're going to separate before we move to the next slide, because this is the most important thing. Most of you may or may not know that a diamond is graded in pure white, B, E, F, G, H, I, and then when it gets to J, it starts getting a yellow tint. So we only do these for 6 DEFGHI, 6 color grades, and 5 clarity grades. Flawless, very, very slightly included 1, very, very slightly included 2, very slightly 1, and very slightly 2. So that's what can be seen with a 10 power magnification inside the diamond. So it's all priced appropriately that you've got these diamonds. So now you go out and you can find a D flawless, but it's not triple X. What makes this so exciting is that it can literally be a fungible. It can be homogeneous because every single diamond is cut alike. There's different color, different size, different clarity, but every diamond is a product that's cut exactly for full dispersion and beauty of that stone. So you can see that it's much easier to sell that as a fungible product. So triple X comes in, and that's the excellent cut, excellent polish, and excellent symmetry. Not good, not very good, but it's triple X. Everything about that diamond's cut and polish and symmetry is perfect. Is perfect. So now you've got these triple X diamonds that you can put immediately on the index to sell it out there on the blockchain. And when you buy the diamond, you've got a choice. And this is very important. When you buy those diamonds from us, you can redeem the diamond immediately, which we'll send the 2 certs to you, the Gemological Institute of America and GCAL, which is the most stringent, toughest, hardest grading lab in the world. But we don't sell you a diamond unless those 2 agree. We get 2 certificates. And about 10% of the time, they don't agree, so we don't sell that unless they agree to those 2 top labs. Then you get a 3D video of your diamond on it, and then you get your place on the blockchain where your diamond is located. Now, what can you do? You can leave it there like I've done, and I'm just going to leave it there. But when I am ready to sell it, I can do it one of 2 ways. I can put a price on the blockchain and say I want $10,000 for that diamond, and we think as the market grows, jewelry stores are going to do all their sourcing on the blockchain because they can cut out 3 middlemen. Why wouldn't they? So the other option you can't, every diamond we sell you has at least 1 bid the day you buy it. It's at least 1 bid. So you can take that bid and cash out right away. So we're talking about now a market that has never been liquid, being liquid because of these triple X perfect diamonds and the blockchain that takes us and allows us to do that. And then if you take it and enjoy it, you can come back and have it re-tokenized and put back on the blockchain in the future.
Tom, I want to jump in there just for a minute, not to interrupt you, but I want to. We're still on this very first slide, which says what makes diamonds a great asset. And what I find so interesting is that there's a little point at the very top that says diamonds have had a similar performance with gold over 50 years, even though there hasn't been a financial market in diamonds. So obviously, there's been a liquid financial market for gold. And people, knew how to buy gold. They could buy gold through, like as you pointed out, call centers. They could buy it through their local dealer. They could call people like you who are, certainly better dealers. But diamonds haven't had this. You have to go to the local jewelry store and often pay a big markup. So the investor really hasn't had this liquid market that he could invest in diamonds. But what you're saying and what we're learning about all of this is that there is now a market for investors, a liquid market. And so now not only can people who want to buy a diamond for, say, engagement or for a wedding or for even investment purposes, they can buy this. And now through blockchain technology, they're able to actually trade this, and it makes the market much more liquid. So now we could potentially see the diamond market potentially. I'm not saying it could happen. You would know better than me, but it seems like anytime you make a market more liquid, then you're going to get more liquidity. And that would mean that you would see a rise in prices over time. And it makes a lot of sense because, as you pointed out, this is what we did. I mean, everybody should know I bought one of these diamonds from Tom, and I'm getting the NFT that I can see the actual certificate. So it's actually on the blockchain, but then I can choose to take delivery of it. And that's what we're going to do. We're going to take delivery of the diamond, and then we're going to have it set into a 24 karat gold ring, and I'm going to put it on my wife's finger. And she's going to be able, and talk about enjoying a hard asset that you own. And then we're going to hold that for a long time. She's going to get to enjoy that beautiful diamond on her finger for many, many years. And then later, when we're ready to sell it, we don't have to take it down to the jewelry store and get, 50% of what we paid for it. We can re-tokenize it, like you said, put it back on the blockchain, and then trade it to somebody else and maybe trade up and get something better. But potentially, Tom, we could get more than what we paid for it. Is that right?
Yeah, we've already seen it, Jerry. We've had 2 or 3 people test it, and that's exactly what happens because they have never seen prices and had access to triple X, because the jewelry store is not going to sell you a triple X because it certainly sells. If you had 2D flawlesses, there could be a different price, but the premium on the triple X we think is going to continue to expand even greater and greater and greater because people are coming in. And one thing I didn't mention, Jacques Verheyse, who was the father, if you go to icecap.diamonds, icecap.diamonds, and look at the management and the founders, Jacques founded Polygon. He was the first guy to have an online trading. This was among dealers around the world where every diamond that sold would be entered, whether it was in London or Australia or New York, to see what different prices were in different areas. So this has been very exciting. Right now, Jacques is in Dubai, and we're opening, Icecap is opening an office with a Russian company that is so excited about this because in Russia, I mean, it is a big percentage hard assets like you're talking about. And I know it sounds funny, but Jacques can tell me a hard asset in Russia is vodka. People know if they buy vodka today, it's a good deal because they're going to use it in the future. And it's kind of funny, but you think about it, and that's what you're talking about is parts of the world have a lot bigger demand, like India, like Russia. They have a bigger demand for hard assets, gold, silver, platinum, palladium, diamonds. And we think the diamonds will be more important to them because of the portability and the confidentiality. So that's exciting to know that we're going to have an outlet over in that area of the world that's going to be help moving these diamonds. And our biggest concern, honestly, is keeping up with, them keeping up cutting. The demand that we're going to have is people realize this investment is finally here and taking away all this markup. I mean, you could make as little as 8 or 9% to break even. I mean, that's unheard of in a diamond. So we're excited, Jerry, about it. And certainly if there's any questions that pop up, just give me let me know.
Oh, I sure will. So we have, and I want to encourage if anyone has, we have many people listening this afternoon, Tom. We have quite a big crowd now. Anyone who's listening who has a question, feel free to chime in with that question, and we'll be happy to address it to Tom. We do have the chart, the slide up, Tom, of diamonds versus gold. I don't know if you want to speak to that particular chart. We also have the diamonds, the Icecap diamonds are GIA graded. You had mentioned that.
That's important, Jerry, because you'll notice Bob Boyes when you go to Icecap.diamonds, the president of the company ran the GIA for 15 years, one of the 2 or 3 most respected men in the world, and he set up the GIA and went through the grading to make it the toughest lab out there until GCal done. So we got the 2 toughest labs there, and you have the certificate that you'll always be able to keep. And like you said on the graph that we had independently done, it just shows you, like you said, diamonds did as well, or right about the same return over the long term of 50 years, even without the liquidity that they have now. So we think about the rarity of diamonds coming in there now. It's just amazing. I think we come in at this stage of the market and have a chance to really see the fast growth as big investors come in, because we've already had just the 3 weeks since we launched this thing, and we've seen some very, very nice size orders, over 6 figures. So it's exciting, and the investors real excited about having something portable, confidential, something the wife can wear. We got one now. We're looking for 2-3 carat earrings that are triple X, that he wants his wife to wear and enjoy, but leave it where down the road they can retokenize it when they're ready. So it's been exciting to do it. Most of you know Dan doing most of the work over on the coin side. I'm still there and done quite a bit the last 2 days. So it's not that I just saw this exciting opportunity for my clients. I've never been out of the diamond business one day in 46 years. So it's not that. It's just now to be able to bring it to people at this kind of pricing, with this kind of expertise, and this kind of all the things it gives you with the portability and confidentiality. So we're real excited about it and think that everybody should have a place, and either, like you said, take the diamond like you did, or like Polly and I did, we left it to be tokenized, but we're not going to put a price up to sell it or ask for a bid. It's just going to stay on the blockchain until we're ready.
But whenever you're ready to do that, Tom, you could just basically just put it up for sale, and then what does that look like? Are there handling costs? Are there, let's talk, let's
2%.
Okay.
2% handling cost on the end. When you go to buy it off of OpenSea or one of the other sites, there's 2%. They get 1%. Icecap gets 1%. I personally don't take anything on the back end. So, yeah, that's the only cost. So like I said, with the 5% up front, 2% on the back, it's about 7%. Always got to go up to break even instead of 100%. The way it has been, close to 100%. You buy something for, $3,000, and you can get $1,500. Now you're talking about buy something for $3,000, and if nothing ever changed, you may lose 2 to 6%, but it's never been heard of before.
Tom, before I actually bought my diamond from you, I did some research. I actually researched diamonds for some time because I knew that you had been selling them for a long time, but I just didn't really take the plunge until this 3X opportunity, which are these, superior type of diamonds that are certainly investment grade, that if you try to buy from your local jeweler, you're going to pay, a lot of money. And so but what was nice is that I did have a little bit of knowledge about diamonds. I knew what I was buying, but when it came to which diamond I should buy, you played that role. I said, Tom, help me. Which one is going to give me the best bang for the buck? Which one is going to meet my needs? And because, Tom, you've been in the diamond business now since 1975, that's a question that you could answer for me. And I would imagine for those who are watching this video, they may be, or this webinar, they may say, I don't know a thing about diamonds. Tom, what's a quick way for them to learn more about diamond investing? And B, tell them how you consult so that they don't have to know everything about diamonds in order to get involved and to have a little bit of their hard asset portfolio in diamonds, because you are a consultant in this area.
Yeah, there's a value index at Icecap Diamonds, and what we do is we're buying them from sources, so they're always not the exact price. So there's a value index, and always at the top of it is going to be the one that is the best deal at that moment, and it'll say something like minus 2% up to plus 10% as you look through the thing, because we're already getting where some of the wholesalers are saying, they don't want to let it go unless they make an extra couple points, but it's no big deal to you because you're holding it. So one thing we'll do is we'll look at the value index. It may be a diamond you can afford and not afford, but what we'll do is find the price, the stone for your budget, and because it's about 3,000 to about 30,000 where 90-something% of our sales will be. Certainly, say we've already had diamonds in six figures by themselves, but there's not going to be many people buying that way. So what we're going to do is take, when you say my budget is, like you did, you and Jennifer did, you give me the best value that, and I did something for you a little different, but somebody can come in and say they want a certain grade. They think it's going to go up more than another grade. But I'm always going to give them the best value that moment for their value. And I have the value index available to me daily where it doesn't change. You can go in there and see what it is, and a week later it'll change. So you will, without calling me and getting what is the best value, it doesn't necessarily mean what you see on their website is available. They just change it once a week. If you call me, I know what's available and what's not up to the moment.
Let's talk about that real briefly here. So if folks want to, I'm sure some people have questions, they can contact you. I'm putting up your phone number right now and your email. They can call you at 912-771-9353. That goes right to you, Tom, right? That's your phone.
That's not my gold and silver office. That is straight to me. Either I'll answer. My daughter's helping me out in this. She'll answer, and we'll get back to you. Or we're tied up, leave a message. We'll get back to you as quickly as possible. What I hope to do, Jerry, is as we build this thing up is, we get 32 or 35 new stones coming out, triple X, and it met the standard of Icecap. It met the GIA and the GCAL cert. Is we'll build a mailing list up that's interested in diamonds, and we'll shoot that out. But let me close my part with this. I know y'all are following what's going on in this world, but it's absolutely gone crazy. If I could tell you the activity going on at our gold and silver affiliate overseas and what's going on in Dubai, I mean, you're looking at bank intervention here where our government's going to spend $78 billion on new IRS agents to fleece your bank account and look at everything. You spend over $600. The president told us he would not have a tax increase to any middle class, is now in this infrastructure saying a 3% tax increase to the average middle class and up to 7% to a married couple. I mean, to think a married couple is now going to pay more taxes than not. I mean, and this ludicrousy goes on, and the dollar has gone from 123 down to 93, and when it goes below 92, every timer in the world says the dollar will take a sharp, steep jump. And as the dollar goes down, your diamond, your gold, your silver, and then throw in the inflation, the highest inflation in 30 years, it is showtime for what the products that I'm dealing in. I mean, it is time to get in there and get out of harm's way. And that's the reason, if you have any questions, give me a call, because I am concentrating on trying to help people. I believe with all my heart this is going to be the biggest transfer of wealth over the next 3 years that's ever been seen anywhere. And that's the end of my presentation.
Tom, we have a couple of questions before we close out today. One comes from Shlomo, who says, can I get the actual diamond if I purchase from Tom? How is it delivered? Do you use a secure delivery service?
Yes, we do leave it. It's insured until you sign for it. We also send you the day that it leaves the office, we send you the tracking number where you can track it on FedEx all the way till you sign for it. And so that is definitely, you can get it. We insure it all the way till you sign for it.
Okay, perfect. We also have another question here from Mel. Mel says, I have heard that diamonds are not actually rare, that the prices and availability are controlled by De Beers. Is this true?
Yeah, well, De Beers lost anti-suit about 20 years ago, but it had to do with the retail end of it, when they were going to open retail stores and market it worldwide. Now, certainly, if you talk about diamond that is not at the top of what we're talking about, there's plenty of industrial diamonds out there that are yellow, have very bad coloring, but the kind of things we're talking about are extremely rare, and you're not getting D flawlesses and F BVS ones out. That's been going down. And you look in South Africa today, which used to be the biggest mining thing. I mean, you see these big holes all over these mining areas in South Africa where it's been mined out. But certainly, if you're saying is diamond a very, very rare material for industrial uses, it's not. There's no question about it. So when you're dealing with pure white diamonds like we are, with no yellow tint, perfectly cut, then we envision in the next 2 to 5 years having a place that can be redeemed in many different cities around the world, where if you take your diamond, your wife wears it on her hand, and you go to Germany, take it to Munich, and there'll be a location there that you can redeem the diamond and get paid in any currency you want. So we're really excited about all this, but certainly if you look at that, the things we're selling, yes, they're very rare, the kind of diamonds that we're talking about.
There's another question, Tom, and I think I can answer this one because I have the Icecap.Diamonds website up now. People should be able to see that on their screen here. But you go to Icecap.Diamonds, and the question is, can we see a list of diamonds that are available? And if you go to Icecap.Diamonds, you go to the, I believe it's the diamond tokens here, and you come down to the Visit Marketplace. And, Tom, they can see the list of diamonds that are available right there, right?
That's right. That was just updated today. So that's fresh. We won't update again for a week.
I see. And so they can come in and they can see the availability, but as you were saying, some of these, they want to call you because they want to find out, and they can ask more questions about what's right for them. So this is a quick place to find out what's available, but then as far as actually making the purchase, they want to contact you and allow you to guide them and consult them on this.
Yeah, I got to make sure it's available. If they see something they're interested in that fits their budget, I've just got to make sure it's available, because I have that available to me. It's not, like I said, that's just changed once a week.
Right.
It's on the website. It went on this morning.
So to see what's available, friends, you go to Icecap.Diamonds, and then you click on the Diamond Tokens tab and go down to the Visit Marketplace, and you'll see all of the current availability. They range anywhere from, Tom, it looks like anywhere from around $2,000 or $3,000 all the way up to, like you said, 6 figures.
Yeah, the 6-figure ones aren't on there. They've been sold, but you will see, I think the most expensive one on there now is $23,000. It's 1.85. So they run, like you said, from $2,200 to about $23,000 currently.
All right.
We'll have a whole new. We're expecting about 20 to 30 new ones by Monday. So that's that.
All right. Well, you've heard it from Tom Cloud. He's working now with Icecap Diamonds. In addition to gold and silver, he is a hard asset specialist. If you have questions, you say, well, I'm not sure if this is right for me, you can call Tom directly at 912-771-9353. Or as we had stated, you can also email him if you prefer to email. You see the email here on the screen, tomcloud1630@gmail.com. And you can ask him your questions by email or by phone. You can research Icecap.Diamonds to learn more about what's going on. It's just a really fascinating opportunity. And you can learn more about Tom Cloud. You can subscribe to our YouTube channel, youtube.com/FTM Daily. There's where you'll get Tom's ongoing video updates. He provides a precious metals update by video on a regular basis through our YouTube channel. And you can also get his ongoing email alerts by going to followthemoney.com/gold. So whether you're looking for gold, silver, palladium, platinum, or diamonds, you can contact Tom, and he will be of help to you. Tom, this has been a really great time today. I sure do appreciate your you being here, and I want to thank you for just all of your knowledge and sharing it with our folks.
All right, Jerry, it's always a pleasure. Thank you for having me.
Absolutely. Friends, great to have you here today. And again, if you have any questions about diamonds, contact Tom Cloud. The phone number here on the screen, 912-771-9353. He's standing by if you have a question. God bless. I hope you enjoyed this Lunch and Learn webinar brought to you by followthemoney.com. If you want to learn more about us, you can find us online, followthemoney.com. Look forward to talking to you again soon through these Lunch and Learn webinars. God bless.